traders, welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 25th, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. This is the daily chart. All right, so what happened today and what was discussed yesterday? In yesterday's video, or not yesterday's, on the weekend video, I mentioned that we'll probably, or the day before, after this big down move, which was on Thursday, I said, well, normally what we normally would see is a consolidation period before we head back down, and we'll probably tag this 200 moving average. Very rare and rare occasions will we see a one-day move before heading down even lower. We would at least get two more days worth of sideways consolidation before coming down. Now with a one-day move, that shows a lot of weakness, which means this is basically a one-day consolidation period before we broke down. Okay, so we have this down move here. We went up for one day and then we broke down. Not to mention this 20 moving average did hold up, but like I said in the previous video, I may hit it once, twice, 3, 4, 5 times, and then now this is possibly a sixth time. We came down, we went up. This is use and abuse. When you have a use and abuse moving average, or a level, or whether it's mathematically calculated or manually drawn, or for that matter a trend line, I don't like to use an abuse because simply it can break down like it did today. So basically we had this big down move, we had an up move on Friday, and then today is Monday, and then we just broke down. The breakdown was substantial, and I have to say that right now I do not see any reason why this thing could not go down to this 200 moving average now, or I should say on a technical basis. Now the only way that I could see this market getting somewhat of a bounce anytime in the short term is simply if they come out with good news out of Europe. Right now there's a lot of fear in the markets, and we'll get to the VIX in a little bit. But as long as there's no absolutely good news, then we may get another sideways pattern, meaning a one-day move to the upside before heading back down into this 200 moving average, or we come straight down into this 200 moving average tomorrow, and then we get a small little bounce. We could gap down into this 200 moving average, in which case I will dump my SPY. Just to let you guys know, I am still short on my second half on the SPY. I used to have a break-even stop. I now have a in the money stop, meaning if this thing does go against me tomorrow for whatever reason, I stop out for at least a 30% profit. Right now I'm in the 76% profit on the SPY short. Okay, I wouldn't say shorts, I would say on my puts. And if it hits this 200 moving average, I'm going to have to definitely consider just dumping my second half, simply because next week is the 4th of July week. I'm not saying that it's gonna go up, but it is a upside bias, simply because the volume should be lower, and that gives a upside bias when you have lower volume, simply because the institutions will have the power or the money to prop the markets higher. That's normally the case for Fridays, Mondays, and the day before and day after holidays. I'm not saying that it is, but there is a likely chance that it will be that way. Therefore, I have to take that into consideration. And because I'm playing with options, is volatility. If volatility decreases, then I'll lose money in the Vega. And then obviously if I hold it through the holiday week, then Theta is just going to eat me alive. Therefore, I'll just probably get out of the markets at this time, or I'll seriously consider it or think about it, wait for any bounce, and then reshort it again down to this 125.66 level. Okay, that's my plan. As a chess player, you gotta plan for your moves, for whatever moves that it does do. Now, if we do get a bounce tomorrow, we're gonna have some resistance on this 20 moving average. Okay, it's gonna be minor resistance, but definitely without a doubt, we're gonna have resistance on this 50 moving average here. So that tells me that this market is still weak. We only had a one-day consolidation period before we broke down today, and again, tomorrow there is a possibility we can get into this 200 moving average, or we could get a flat day before coming back down into this 200 moving average. It really depends. We have a lot of news coming out this week, so I think starting from Wednesday, basically if we get another down move tomorrow, then I'll probably take everything off the table, wait for a bounce, and then reshort the markets again, and wait for this 125.66 level. So I have this alert at 130.01 here. So if I get alerted, that's close enough to the 200 moving average in my opinion. We also have this gap window, and then we have this gap fill right under it. We're gonna run into a lot of support here, so I'll probably take the rest of the SPY off the table. So let's talk about the US dollar. Actually, before I do that, I just want to mention if you are already short in the market, at least put a break-even stop in there in case this market does do a reversal right back into this 134, 135.44. I've seen it happen before, so just be aware of that. There is a possibility. So if you are in the money, always have a break-even stop, and that's my opinion. But it'll keep you safe. All right. Then you have no stress, no sweat off your back or anything like that. You have a break-even stop. The market stops you out of break even. It's like you never even entered it. At least you're not losing money. Yeah, sure, it could turn around, but that's the psychological part that you have to overcome. That if you're in the money, there's no reason, in my opinion, that you should actually start losing money on any trade that you're in the money on. Now, if you're substantially in the money off of this short, I would put a break. I would put a in the money stop. This is exactly what I have. In case the market does go against you, then you stop out with a profit. Okay, so you just want to take that into consideration. Would I chase? No, I would definitely not chase. After this big move here, I wouldn't chase. In fact, I would have waited for 3 days. 3-day consolidation before I reshorted the market. It obviously came down a lot sooner than expected. Okay, so now let's check out the dollar. This is a chart of the US dollar. This is the DX. Now, we had this breakout of this, this descending triangle pattern here. I did want to see it. It would have been really nice to see it come into this level here, but it obviously did not. We had a breakout. Normally, we get a 50% retracement before we go higher. But what's interesting that I see now is this is somewhat of a weird looking consolidation period for a possible pop higher, but the problem I have with this consolidation period is going up. Consolidation periods, in my opinion, is normally down slightly or straight across. This one is actually pointing higher. So, there's a possibility that the dollar could actually start coming back down and create somewhat of a rounded top scenario. We're going to have to keep an eye on the DX, but maybe we might be able to get a better idea on the UUP because that seemed to have hit the level appropriately and is doing what it needs to do today. Right, this is a chart of the UUP, which is also the ETF that tracks the dollar, right? Now, we have this 50 moving average and we have this pivot point here, which is pretty similar to the chart that we just looked at. The difference is it actually hit it, right? So would I consider the UUP as a more reliable chart at this time? Not always, but at this time, then yeah. I'll definitely follow the UUP until the DX starts going in back into gear again. So basically, we went right into and officially hit this 20 moving average here. So there's a possibility we could get a slight bounce or pullback on the UUP before heading higher, which would cause a possible flat day tomorrow or slight upside tomorrow after the big move. Basically, a dead cat bounce, just like the previous Thursday. Okay. This is a chart of the VIX. The VIX is, as we all know, the fear indicator or the fear index, I should say. So right now the VIX has actually broken through this 1949 level and is all the way up here. Actually came really close to this 20 moving average. What does this tell me? This is a lot of technical damage to the upside, right? I mean, we had this pretty darn good resistance line here, which is this green line here, and it just broke right through it and went almost into this 20 moving average. This simply basically tells me that, remember in the previous video I said when the VIX is all the way down here around this area here, all it takes is just going to be some kind of news before we get a lot of fear in the markets. And again, the fear is the stronger emotion from greed and hope. Therefore, once we get fear in the markets, then that normally brings the markets down. So basically, the VIX came up, almost went into this 20 moving average and closed below this 50, but we still had a very substantial pop in the VIX, telling us that the fear is coming back in the markets and it has a potential of actually officially hitting this 20 moving average, and possible we may get a bounce off the VIX too, which is also telling me that we may get some upside tomorrow or a flat day tomorrow. That remains to be seen, but the whole point in the matter is this is why this is a good example of why the trend is your friend. You don't want to go against the trend. If the trend is down, then that'll protect you in case the markets go higher, because it won't go that much higher. Because the consensus is that the trend is down, the markets will continue in a downward fashion, and therefore you want to stay with the trend, right? And that's exactly what happened today, where we had a one-day consolidation period. People who jumped on to the long side here expecting more consolidation to happen possibly, or even possibly get into this 50 moving average. People who went long there just got demolished today. Why? Because they went against the trend. And again, if you do go against the trend, it is definitely possible, but you want to get in and out as quick as possible. So once you're in the money on a counter trend trade, you get out, you take your profits, say thank you very much, and then you reshort the market or you go with the trend. Okay. This is the chart of the GOD here. We still have this level here, which is still, in my opinion, valid. Okay. However, this rising triangle wedge pattern thing here is still holding up. Let me just delete this trend line here. And basically, what the GOD went into was this gap fill over here. Okay. And we're getting a slight bounce. Now, be very careful. I wouldn't go long in gold, in my opinion, because when these two moving averages come together, it's going to put a lot of pressure on gold to come right back down. Okay. So just keep that in mind. That's what I'm seeing right now. That's what the charts are telling me. Things could obviously change, but that's what I'm seeing. And if I do see a price go into these two moving averages here, I may actually consider taking a short, depending if the pattern looks good and if the timing looks right. Okay. This was the chart of Apple. I did say Apple was I was short at 607. Okay, I'm going against what I'm thinking, because if you looked at the previous video, I said if we had a breakdown of this trend line, and then I said, oh well, actually if we get a breakdown of these two moving averages, and that's exactly what we did today, we actually got a close below it. Right, my stop is going to be any close above. If this guy closes back above these moving averages, then I'll probably stop out. But I may consider stopping out if it closes above this trend line here again. So this could be a fake out or head fake, as some would call it. But right now the markets are weak. So if the markets continue down, that's going to put a lot of pressure on Apple. And I'm going with the trend in this trade. So I basically shorted Apple, a small position, obviously. And then if it can somehow get into the 607.62 level, then I'll probably reshort Apple. But for now, I'm shorting Apple, and I'll probably take my profits if it ever gets down here. That's probably unlikely. I would say if Apple can get down here, then I'll probably take profits. So that's the low of today was 570.37, and this level here is at the low here is 567. So 567, and the low is 570. So that's a $3 drop. If I can get $3 off Apple, and that's obviously substantial, meaning we could easily get $3 off Apple, right? But again, when you play with options, you're playing with your Greeks, and you just have to be very careful. And right now, I am short Apple, and I'll just watch my levels. I mean, if we reach this level here, I'll probably sell half, and put a break-even stop on the second half. So if Apple goes against me, then I'll just stop out with a break-even, and then if not, I'll hold my second half to this level here, and then I'll stop out. I'll sell my the rest of my shares for a profit. Okay. All right, this is a daily chart of Walmart. Walmart's still looking pretty good. I mean, like I said before, I mean, when okay, so I'm contradicting myself. I shorted Apple, and Apple is one of the beasts. But what is more of a beast is Walmart. Okay, and remember, I mean, I'll say it and I'll say it again. When you short, you want to short the weaker stocks, right? I mean, with Apple, I took a small position, obviously because it is one of the stronger stocks. But Walmart is even stronger, which is why, even though today the markets were weak, Walmart, had a nice bounce off this 20 moving average, which would probably make sense, simply because Walmart is such a strong stock at this time. So we could definitely get into the $70.56 level very shortly, and especially with the holidays next week, that's a possibility. If it never gets there, then I never short Walmart. Not a big deal, because it's one of the stronger stocks. Sometimes I look at this chart, and I think to myself, well, maybe I should just stay away from it completely, because it's such a strong stock. And even in a weak market such as today, I mean, look at the day before yesterday on Walmart. The markets were very well. On this day was Thursday. The markets were very, very weak, and Walmart barely did anything. Okay, and today market was weak again, and Walmart caught a bid. So it's almost as if Walmart has a mind of its own, does not care what the markets do, trades the way it wants to trade, and right now it's a beast. It's one of the beasts out there. So you just want to be careful when you short these stronger stocks. Okay. That's about it. I'm gonna actually run some scans, maybe either tonight or tomorrow morning, to check out more stocks. I'm gonna probably look for more long plays to catch the bounce. Hopefully, we get a bounce, and then, again, it'll be a counter trend trade. So if I do, look at some stocks to catch the bounce, it'll be in and out very fast. It won't be like how I'm playing the SPY, where I shorted, I sold half, and then I'm keeping the other half. To get greedy, because that's a good time to get greedy. When I'm in a counter trend trade, I sell everything, and I'm in and out as fast as possible. Take your profits and run. In any case, this is your 7-minute market update. God bless you all. Thank you for watching, and I hope to see you in the next video.